Hello and welcome to Angel Insights, the show that takes you inside the world of early stage investing to reveal how startups get funded and the processes behind their funding. And joining me today is our very own Tom Britton, co-founder and CTO at SyndicateRoom, one of the UK's leading equity crowdfunding platforms, having raised 40 million in funding for startups last year, and having recently raised their own round on their own platform. So a big congratulations to them for that. And in the show today we discuss the future for crowdfunding in fluctuating credit cycles, why one business is more suitable for crowdfunding than another, and the effect of Title III. Will it have the ramifications that everyone is suggesting? Therefore, without further ado, I'd like to pass over to Tom Britton, co-founder and CTO at SyndicateRoom. Tom, welcome to the show. It's absolutely fantastic to have you on. Thank you so much for joining me today.
It's a pleasure to be here, Harry.
I also want to say a big congratulations for the recent raise on the SyndicateRoom platform, so congratulations for that.
Thank you. Much appreciated.
And I'd love to start with a little origin story, so 2 to 3 minutes of how you came to found SyndicateRoom from a little office in Cambridge.
Sure. Funny story there. I was doing my MBA back in 2012, and I come from a product development background, so I did the mobile apps for the train line and a few other things. I met Gonzalo, who's my co-founder at Syndicate Room, while I was doing the program. And I actually thought that I might be able to get paid to help him out to do a bit of work throughout the course and kind of fund my lavish student lifestyle. Not so lavish, but what turned out was he said, you know what, I'm a startup, I can't pay you, but maybe if this works out, I can offer you a job at the end of the program. And we started working, I think, together in kind of October, November. And by March time, I was actually helping him fundraise. So I had gone from thinking that I would get some money out of him to actually, you know what, I want to be a part of this entrepreneurial journey. And we kicked off Syndicate Room. We did a soft launch in March of 2013. And then we raised the money that we needed to raise. And we did our larger kind of call it public launch in September 2013. And we've been kind of growing the business since then from 2 of us to now almost 30 of us. So it's been fun.
So talk to me about the transitory moment there when you decided that this was something that you wanted to do. When was that moment for you? Was there a milestone or an inflection point?
I think there were 2 things. I'd gone on to interview with a bunch of different management consultants and other businesses who came to the program to try and recruit people. And I just thought nah, that's not for me. I had a taste of the startup life, if you will, when I was at the train line. I joined them relatively early on, but also in working on their mobile apps. It was as if we were a startup within the Trainline team, building the prototypes and then launching them. And we got a couple million downloads of the app. So I had a taste for it. I didn't necessarily enter the MBA knowing that I was definitely going to be an entrepreneur. I thought maybe I'll do management consulting or something where I can get a bit more experience. But after having met him and learning about the vision of Syndicate Room and the fact that I was going to get to work with a number of other startups, I just thought, you know what, this is the right time. I've already got student debt. If I go broke, I can just wipe it all off. and not just that, of course, but he was the ideal co-founder for me. I had the technical background. He had kind of the engineering and the operations side of things, and we worked really well. And I just thought I'm not going to have a better chance to make the switch from corporate life to startup life. So it was probably by February. And then in March when we did the soft launch, it was one of the highs, getting the product actually out there. So I really bought into it then.
And I want to start off then with a macro overview on the crowdfunding industry now and discuss how you think crowd investing will perform during a different part of the credit cycle. We've had a good few years. How do you think that crowd investing will do when interest rates rise and default rates increase?
Yeah, well, we're yet to see that yet, but should it happen and should the economy continue to pick up, I actually think crowdfunding could do even better, especially on the equity side, when people have a bit more disposable income that they're willing to put into the riskier asset class that is equity crowdfunding. On the peer-to-peer lending side of things, minus the scandal that people are talking about in the States, I don't think that the rates that you'll get from returns are going to increase significantly enough on the bank side to put people off what they'll get through the peer-to-peer lending side. So, right now at a bank, you're getting kind of 0.5%, and on the peer-to-peer lending side, you're getting 3, 4, 5, 6, 7 in some cases. So there's a long way to go before there's parity between the two rates that are offered. At some point, of course, the risk of these loans that aren't going through banks and the returns that you get might not be equivalent, but could be equal in the sense of at a bank, no risk or less risk. Peer-to-peer loans, you assume higher risk. So maybe there's a 2% margin. I don't know what that exact margin is, where people think, okay, now I'm going to start putting it through the bank. But I think we're many years off that actually happening.
And you mentioned P2P platforms there, and another interesting trend that we've seen in capital markets is 50% of capital on P2P is now institutional. So do you think institutional capital entering crowd investing is a definite possibility?
Well, like you said, it's happening on the peer-to-peer lending side of things, and we're starting to see it much more through the equity side of things across the platforms. Actually, in our own raise, which you mentioned earlier, we had a venture capital trust come in and invest £1 million in us. There were some changes to taxes and regulations this last year, which mean that we'll see more VCTs investing in these earlier stage businesses, unlisted businesses. You also see a lot of the venture capital funds looking at peer-to-peer platforms or equity crowdfunding platforms as a way to access deal flow. There's a number of good companies, if I can use the term good, that have come through equity crowdfunding platforms, or appealing companies, if you will. And the venture capital companies want access to them, so they've invested alongside the crowd investors.
And brilliant intro there to VCs, because there's a big question over whether businesses should be VC funded or whether they should be crowd funded. So I'm really intrigued to hear what you make of whether something should be VC funded or whether it should be crowd funded. Is there a clear differentiation between the businesses, or is there businesses like Beaulah with mustard seeds which do both SyndicateRoom and mustard seeds?
Definitely overlap, and I wouldn't say that there's a clear enough divide between the type of business, so much as there is a divide between how much the business needs to raise. So equity crowdfunding is still relatively new. The first platform in the UK launched in 2011, and the size of the round that equity crowdfunding platforms are participating is relatively low. So I think the largest round to date in the UK is around 5 million. And so if you're in need of that amount of capital, then I think you actually get benefit from getting a VC and a crowd on board. If you look at what the crowd brings, building advocates out of each of your investors. Think about this. If you had 200 or 300 people and you're a small company out there talking about your business, your products, getting other people engaged, that's the best form of marketing you have. These passionate people who believe in you enough to put money in you. So there are things beyond the money that the crowd gives you. But then there's also things that an angel or a venture capitalist gives you, the experience that they've got, the networks that they have. So there's benefits to both. And we'll see a lot more of these hybrid rounds. Now, if you're raising 10, 20, 30 plus million, it's probably too large of a round to go through a crowdfunding platform. Though we have seen some of these larger raises do, say, $1 million through a crowdfunding platform, and the rest through a VC. I think that as we grow as an industry and as a platform ourselves, we'll start to participate in those later rounds. And then the choice doesn't necessarily become this or that, but more hybrid rounds.
Do you think there are any challenges to the crowdfunding then moving up the stack of funding environments in terms of doing those Series A, Series B, 20, 30 million even funding rounds?
No. Well, the biggest challenge is just scaling up and getting more investors involved. If we look at it, it's a platform, right? It's a platform technology that aims to bring venture capital, angel investment, and all forms of investment online. So traditionally, venture capital and angels were offline activities where they would invest. They have groups and clubs. They have their massive offices where the entrepreneurs come and pitch. Now that can all be done online. And so it's really if this is a real word or not, the platformification of investing. So we've started to see the VCTs come down and invest on the platforms. Some of the venture funds have invested through platforms into businesses or have invested into businesses that are on platforms. I think it's only a matter of time where the platforms kind of continue to grow and get all different types of investors coming through the platforms. And the platforms just act as the hub where the pitch and the investment takes place.
And talking of the kind of platformification of the democratization of funding.
So it is a word.
I'm coining this now, I've stolen it. But where do you see yourself then compared to Angelist? Because it's a relatively similar model, is it not, with the lead experienced investor? So how do you compare yourself?
We are similar in our vision and what we try to achieve. We try to build syndicates around investment opportunities. So all of our investments, as you know, have a lead investor or a group of lead investors. Angelist tends to focus on the building of the syndicate. So you get the big people in the States, the Gills and the Marks and all of them create their syndicates, and then they reach out to find investors to invest with them, and then they find kind of the deal flow. We do it in a little bit of a reverse order, in the sense of we find the lead investor in the company first, then we build the syndicate around that particular investment opportunity, instead of having kind of the ongoing syndicate that looks for multiple opportunities.
Mm-hmm. And kind of speaking of those US investors there, I have to touch on the recent announcement of Title III in the US. And a friend of mine, Ryan Caldbeck, co-founder at CircleUp. Yeah. So he told me that unaccredited investors would get the worst deal flow, as the best startups go to VCs and get funded, those that don't go to VCs go to angels, and those that get rejected by angels go to high net worths, and those that get rejected by those then go to the unaccredited investors, giving them the worst deal flow. So what are your thoughts on this, and how we can solve for kind of the filtration of the worst to the unaccredited?
It's funny. I heard the same thing about 3 years ago here in the UK, where equity crowdfunding platforms were going to be the place where only those businesses that got rejected by the VCs and the angels went. And to be honest, that's not the case. I touched on it earlier, but you get a lot more than just capital when you go to a crowd. You look at certain raises that have gone to crowdfunding platforms, where they've done it purely for the marketing element and to build customer traction. The platforms now have thousands, tens of thousands, hundreds of thousands of investors. So you're getting exposure to these investors. And like I said, if you can get people to invest in you, they become your biggest advocates. So I think he's wrong to assume that the companies in the US will ignore the crowd to go to a VC when they see that there are potential benefits of doing a crowd raise. There's some things about Title III that I don't think are efficient in the cap on how much can be raised through equity crowdfunding, and the cap on how much investors themselves can put in through equity crowdfunding if you're not a sophisticated high net worth. But again, there was no regulation of this when equity crowdfunding started in the UK. And the right regulation has come in. And in the US, this is really kind of like the first, even though it's Title III, it's the first time that the crowd or the wider crowd can invest. So they've not got everything right, but they will continue to evolve that and make it better. And if I can just end on Title III, I think that the number of companies that you see going through the platforms will be small to start, and maybe there will be some dross. But as people do realize the benefit of it, we will see better quality opportunities using crowdfunding as part of their funding.
Mm-hmm, absolutely. And talking about kind of the future and the effect of Title III, I want to discuss now the broader ecosystem of crowdfunding and what the roadmap looks like for the space as a whole going forward. So what are your predictions, and is there anything that concerns you in terms of bumps in the road ahead?
Yeah, well, the global economics, right? So if there's another turn down, we'll see how that impacts the number of businesses raising through us. But I think the term crowdfunding is a very short-term term because it's yeah.
Brilliant coining of phrases here. Platformification and
short-term term. But people call it crowdfunding, and it's just early-stage finance. Like, crowdfunding itself is a buzzword. What these online platforms are investment banks, right? So where they're going to head is becoming more like investment banks, and using, instead of just high net worths to fund them, you'll have a wide audience of crowd investors funding these investment banks. So it's kind of bringing down the assets that were only able to be invested by these wealthier and sophisticated individuals, and giving the option for the crowd investors to invest in those types of assets. So right now we've got peer-to-peer loans, we've got mini bonds, we've got equity-based crowdfunding. But at SyndicateRoom, and this is the only plug I'll really do today, we now allow people to invest in IPOs, and we allow people to invest in share placements. So I don't see why these crowdfunding platforms aren't going to move into other asset classes, both vertically up and down the chain, and then as platforms geographically spreading outside of the UK and Europe and into Asia and into other parts of the world. So let's get rid of the term crowdfunding platform. We're really just kind of little investment banks, if you will. Or at least that's what I tell myself to make it seem like I'm adding value.
Do you expect to see other platforms move into the public market space?
I do. It makes sense. The equity crowdfunding market in the UK was only like 150 odd million last year. I say only. It was only 80 million the year before and 29 million 2 years before. But you look at like the IPO market, and there's about 12 billion a year that goes through London. Right, so we're comparing a 150 million pound market that might be 300 million pounds this year with a market that's established at 12 billion pounds. And you think, well, maybe SyndicateRoom's a bigger fish in this smaller market, and we're just a small fish in that bigger market, but that gives us more opportunity to grow within that much, much bigger market.
And being controversial, we always hear founders say about the importance of founder focus. So with that in mind, why did you decide to expand into the public markets when, no one in the UK has nailed the crowdfunding market entirely? There's, I think, 2.8 billion in EIS, and the amount going through crowdfunding platforms at the moment, correct me if I'm wrong, probably last year would be about 200 million total.
Yeah. So on the equity side of it, 200 million. The biggest thing for us is we had a choice that we could make. We could go kind of geographically, as some of our competitors have done, or we could go vertically and move up the chain and the asset classes that we offer. And from an investor perspective, moving up actually gave a lot of benefit to our current investors. So we've got a lot of people who have unlisted assets in the stuff that they invest through equity crowdfunding with, and in giving them a more liquid asset class through the IPOs and the share placements, we're actually allowed to offer them now the full spectrum of both risk and liquidity. So people can invest in as risky as stuff that's just more than an idea, or stuff that's actually listed on the market where they could sell kind of the next day if there's a buyer. And really, they now have a full spectrum on of their equity portfolio in one spot. We're the first to do that, and I think as an investor, you see, okay, well, now I can do all of my or most of my equity investments under one portfolio, under one brand, if you will, and that's what we wanted to give them. So we've got people who have a proper portfolio, if you will, with SyndicateRoom.
And I want to dive into a quick fire round now, okay? So sure. I say a short statement and you give me your immediate thoughts. So your favourite book at the moment and why?
So I just read Talk Like TED. The author did a lot of reviews of people who have given TED Talks. I'm sure you're familiar with TED Talks, and kind of the reoccurring, not themes, but trends and how they engage people. And I thought I wanted to improve how I present SyndicateRoom to people. So I picked up that book, and it was really useful. And this last week when we did our big presentation, or a big summit, if you want to call it that, and I had to give a few-minute talk. I took a lot of the lessons from that book and from watching far too many hours of TED videos, and I was told that I gave a good presentation, so it was definitely useful.
And then highlight of the entire SyndicateRoom experience for you?
Going back to that day where I decided that I didn't want to take a corporate job and that I would give the entrepreneurial thing a try. I had tried to be a part-time entrepreneur a number of times before that and didn't fully commit, and the businesses didn't work out. So that moment when I fully committed to it was, hate to be cliche, but liberating in many ways. So.
And then your favorite blog or newsletter, what's the must-reads for you when they come in?
I've been reading, newsletter-wise, it's CB Insights. I think the data that they provide is incredible, and the insights that they add to it with a bit of humor is fantastic. And I've been reading a lot of Both Sides of the Table, which I know a lot of people talk about. So those two of late have been my favorites.
And then the biggest mentor to you and how it came about?
Yeah, my biggest mentor is my old boss, actually, at the train line. So he had been a successful entrepreneur before. He had experience in everything from startup to company that has sold for £500 million. And he's just a wealth of information, and he's probably one of the few people who I go to who I know is not going to blow smoke up my ass, sorry for swearing, and tell me how it is and tell me where he thinks I'm making mistakes and where I can improve. Definitely need someone like that on board.
And then the final one, the next 5 years for you and for Syndicate Room.
Yeah, so this round that we raised is all about scaling up the business. Really, we're going to spend the next year focusing on growing our public markets offer, increasing brand awareness around that, and then we're going to start to look at other types of asset class that we can get into.
Tom, thank you so much for joining us on the show today. It really has been a pleasure, and it's been fantastic to hear the Syndicate Room journey.
Likewise, Harry, it's always fun chatting.
And I'd like to say a huge hand to Tom for giving up his time today to be on the show. Absolutely fantastic to hear the Syndicate Room journey, and very exciting to see the recent fundraise and the recent move into the public market, so we will watch this space. And if you would like more information about Syndicate Room, then you can head over to the website at syndicateroom.com, or you can follow them on Twitter at SyndicateRoom. As always, it's been an absolute pleasure bringing you this week's show. Thank you so much for tuning in, and we look very forward to bringing you next week's show.